The world's top 5 stock markets. Which one will you invest in? When it comes to investing, one of the most important decisions is where to invest. The world's top 5 stock markets offer great opportunities for investors. But which one should you choose? Each market has its own set of advantages and drawbacks, so it is important to research and understand them before making any decisions. In this video, we will take a look at the world's top 5 stock markets and discuss the pros and cons of each one. 1. The U.S. When it comes to stock markets, the U.S. is one of the most influential in the world. It is home to some of the largest and most powerful companies, such as Apple, Microsoft, and Amazon. With over 7,000 publicly traded companies, investors have access to a wide range of sectors. The U.S. has historically been a safe haven for investors and offers the most liquid stock market in the world. In addition, U.S. markets offer traders a variety of different products and services, from options to futures and commodities. The U.S. is also home to the most widely used stock exchange, the New York Stock Exchange, NYSE. With its powerful companies and long history of success, the U.S. is a great place for investors to begin their journey into the stock market. But it doesn't stop there. The U.S. also offers a variety of stock exchanges, such as the Nasdaq, NYSE American, and the Chicago Board Options Exchange, CBOE. Each of these exchanges offers different trading opportunities, so be sure to research them to determine which one is right for you. With so many options, the U.S. is sure to have something that meets your needs. 2. China. China has the second largest stock market in the world, and it has experienced exponential growth over the past decade. The Chinese stock market is made up of 2 major exchanges, the Shanghai Stock Exchange, SSE, and the Shenzhen Stock Exchange, SSE. The SSE is the larger of the two, with more than 1,400 companies listed on it. China's economy has been growing steadily for the past few decades, and that growth has been reflected in its stock markets. Many global investors are attracted to China due to its immense potential for capital gains. China is a powerhouse of economic activity, and its markets provide a great way to diversify your portfolio. The Chinese market can be volatile, so it is important to do your research before investing. It also pays to be aware of the restrictions placed on foreign investors by the Chinese government. However, if you are willing to take the risk, investing in the Chinese market could be an excellent way to diversify your investments and potentially reap huge rewards. 3. Japan. Japan is one of the world's leading economies, and its stock market is no exception. With more than 3,700 listed companies, the Tokyo Stock Exchange, TSE, is the largest in Asia and second largest in the world after the New York Stock Exchange. The TSE is home to many major Japanese companies, including Toyota, Honda, Sony, and SoftBank. It is also home to many smaller companies that could become larger in the future. Investing in Japanese stocks has its benefits, as the country is home to some of the world's most innovative businesses and most efficient corporations. Japan is also well positioned for long-term growth due to its large population and highly educated workforce. Investors should be aware of Japan's cultural differences, however, as well as the language barrier that might exist. The Japanese market is relatively stable compared to other international markets, with stock prices typically ranging from a low to a high value rather than making large swings. As such, investing in Japan can be a great option for those looking to diversify their portfolio in a relatively safe environment. Additionally, the yen's strength relative to other currencies can provide investors with a hedge against potential losses in other markets. 4. Hong Kong. The Hong Kong stock market is the 4th largest in the world and is seen as a major global financial hub. The Hang Seng Index, which tracks the performance of the 42 most heavily traded stocks of the market, has been around since 1969. As with other global markets, the Hong Kong stock market has been affected by the coronavirus pandemic, seeing its biggest one-day drop ever back in February 2020. However, the stock market has since rebounded and is back on track for continued growth. Investors in Hong Kong can access a variety of companies from around the world, including from China and the U.S. This gives investors a lot of flexibility, when it comes to diversifying their portfolios. Additionally, the Hong Kong government has implemented a series of reforms that have helped to improve transparency and access to capital for businesses in the city. In recent years, the Hong Kong stock market has seen an influx of foreign investors who are looking for new opportunities in Asian markets. This influx of capital has helped fuel economic growth and increase liquidity in the market. Overall, the Hong Kong stock market offers investors a great opportunity to invest in a number of different companies from around the world, while also providing access to a wide range of innovative companies and startups. With its strong fundamentals, investors should consider adding the Hong Kong stock market to their portfolio. 5. UK. The United Kingdom stock market, known as the London Stock Exchange, LSE, is one of the oldest and most respected in the world. It is the fourth largest stock exchange in the world by total capitalization and the second largest in Europe, after Germany's Deutschbörse. The LSE includes a broad range of companies from small caps to large caps with a wide range of industries and sectors represented. The most popular stocks traded on the LSE include those from financial companies such as banks, insurers, and investment firms. The largest of these are Royal Bank of Scotland, Prudential, Lloyds Banking Group, Barclays, Standard Life Aberdeen, and HSBC Holdings. Other large publicly traded companies on the exchange include British American Tobacco, Vodafone Group, Unilever, AstraZeneca, GlaxoSmithKline, and BP. Investors who are looking for higher returns and are comfortable taking on more risk may want to consider smaller companies on the LSE. These companies offer exciting opportunities but also come with more risks than large caps. Examples of these small-cap stocks include property development company Westbury, tech firm New Call Telecom, renewable energy group Greenco, and media company Aram. Overall, the UK stock market offers a wide variety of investments for investors who want to diversify their portfolios across different industries and risk levels. The London Stock Exchange is highly regulated and has very strict listing requirements, so investors can trust that their investments are secure. What do you think of our video? Let me know in the comment section below. If you enjoyed this video and want to hear from me again, be sure to hit that subscribe button before you go. Thanks for watching.